Good morning. Welcome to Stock Market Today for Friday, December 4th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas to consider in your inbox every trading day before the market opens. Let's dive in on a Friday morning. U.S. equities finished higher in Thursday's trading, though they ended off their best levels after it was reported that Pfizer may only be able to ship half the doses of its COVID vaccine planned for this year. Energy, REITs, and industrials outperformed while utilities and materials lagged. Treasuries were stronger with the curve flattening. The dollar came under renewed pressure on the major crosses, UUP or DXY breaking down out of that consolidation. Gold finished up 60 basis points. Crude oil closed higher by 80 basis points on the day. And as we get to the desk on a Friday morning, S&P futures are up 30 basis points ahead of the non-farm payrolls report today. Asian markets were mostly higher overnight with South Korea and Taiwan hitting record new highs. Both of those are markets that I've highlighted in my notes to clients within the past couple of weeks. European markets are mostly higher. Treasuries are weaker across the curve. Dollar is better against the yen, lagging on the euro cross. Gold up 10 bips, WTI crude following on, up another 1.1% after that gain yesterday on the heels of the OPEC plus deal. So that's what's happening this morning. As we dive in on a Friday, we start out with markets continuing to grind higher. SPY supported 360, then 340. For the Qs, 260 is key support, but 280 in the near term is important as we think about like kind of the center of this consolidation here. Holding above 280 keeps the door open for further advances. For the IWM, continuing to grind, maybe a little bit of a stalling activity, support near 170, then 160 below that. As I have been saying all week, I think as long as SPY is above 340, you are playing for 413. That's 4130 on the index itself. So not a ton to say that's changed in the near term. A lot of the things that we've talked about this week remain in place. Breadth is still supportive. The rally is expanding. And now you're actually to the point where the Qs, right, one of the big themes off the March lows that's been consolidating for 3 months is now starting to work top side. So I think that that's bullish overall. Obviously, those are where the monster stocks reside. But we want to take that within the framework of all of the other positives, right? So I think the bullish bias remains in place. You can see the trends, either resolving or continuing to the upside. And we think that's something that's likely going to continue to play out. That's been our view. Our roadmap has roughly played out for the most part, and we're going to stick with it. Bullish bias into the end of the year. Let's hit our market in a minute now. What are we writing about? Well, stocks end off the highs after that Pfizer vaccine report. The growth over value theme is actually nearing a key inflection point just as the copper to gold ratio is becoming overbought at resistance. So that's kind of interesting. Semiconductor outperformance continues to accelerate, and the acceleration is important. Something that I've been paying a lot more attention to is not even so much the trend of the relative ratio, but is it accelerating or decelerating? I think that is an important feature that I've kind of added to my framework here. Taking a look at the futures, as I said, they are higher ahead of that non-farm payrolls report today. Now, as we look at the major indices from a power bar perspective, after adding 28 basis points yesterday, the Dow is still pitching a shutout. 4 bulls to 0 bears. S&P 500 down slightly, but still a solid ratio at 122 to 47. The NASDAQ adds 14 bips, 15 to 11 bulls to bears there. Small caps outperform 805 to 168 on the ratio. Bonds uptick, sending yields lower. Energy was once again your best performing sector if we're paying attention to what's happening within the energy complex. 3 to 1 bulls to bears on the ratio. And according to the power bar, small cap stocks and large cap stocks are strongly bullish. Let's take a look at what's happening now with our stock of the day. One of the things that I'm highlighting in my note today is the breakout and really the continuation of the uptrend in comm services, ticker XLC. So I drilled down on some of the names within that group, and Omnicom looks interesting as a potentially bullish idea. Stock has a bullish rating, strong trend above the rising long-term trend line, strong industry group within the media complex. And one of the things that I've been noticing is this pattern where we're seeing stocks, ETFs, et cetera, take out this interim June high here while seeing a shift in relative strength. So that's kind of impressive to me. That's, look at what's happening. Downtrend, consolidation, now resolving to the upside and actually beginning to outperform. So that is a setup that I'm seeing all over the market. I'm trying to highlight them wherever I can. At the same time, we have bullish money flow, and Omnicom is nearing an oversold level based on our indicators. So when I think about a setup like that, looks fairly compelling for the pure chartists out there. You have a consolidation with a low of 45 and a high of, call it roughly, let's be conservative and call it 60, even though it's a little more than that. That's 15 points. Tack 15 points onto the breakout level at $60. You can see 75 lines up with the lows that were in place before the stock completely imploded to the downside with the COVID crash. So kind of an interesting setup here in Omnicom. That's one worth looking at here today. Taking a look at the sector tracker now, the movement of the major sectors over the last 5 days of trading. Healthcare at the top of the list. That's not something we've been able to say often. There's comms, which is why I'm highlighting it in my note today. You also have tech beginning to come on a bit. Now, I've touched on this. I've written about it. Qs are trying to break topside from that consolidation above the September highs. After that, we have staples, fins, and discretionary all positive. A little bit of profit taking in the energy and materials space. REITs, UTs, those are your defensive groups. We like to see them at the bottom of the list. So just kind of, normal back and forth trading here with the rally continuing to broaden. Looks like some of the more offensive areas, right? Some of the former leadership starting to regain their footing as well. I view that as a positive. So not really a ton of reason under the surface to change my views either. So our industry in focus today, healthcare services. Speaking of healthcare at the top of the list, I think that this is a name or a group that you want to take a look at. Past 6 months, it's outperformed by nearly 10%. It's got a very strong power bar ratio with 24 bullish or very bullish stocks. Only one bearish stock to speak of. Currently ranked number 6 of 21 subsectors. So some of the names there that we might want to pay attention to: Universal Health, UHS, Providence Services, PRSC, and McKesson, MCK, all with very bullish Chaikin power gauge ratings, and all are holdings of a fund that really not a ton bad to say here. XHS, the ticker symbol on the SPDR S&P Healthcare Services ETF, has a bullish rating. It's in a strong trend. We see the power bar ratio once again solidly bullish. Notice how we failed and become oversold, and the indicator is now rounding higher on this fund. That's a solid outperformer. So a little bit of a near-term consolidation after breaking topside and likely going to resolve to the upside. I say likely because honestly, I don't know what's going to happen, but the weight of the evidence supports continuation to the upside for this group. So if we're looking for ideas to take advantage of a rally into the end of the year, I think that this is a group where it makes sense to spend some time. There's 24 bullish names based on our power gauge rating. You can even look at some of the neutral names that are outperforming, right? Remember, relative strength is extremely important. So there's no shortage of ideas out there. There's no shortage of good trends. So a lot of opportunity to take advantage of a rally into the end of the year. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Not a lot of company-specific news here, but I will say, Ralph, Norwegian, American Airlines, and Carnival Cruise are all part of that reopening. And I kind of find this interesting that these stocks were so strong in light of that Pfizer news. You would have think that they would have come off harder than they did. And I think, a lot of people are trying to do the dance, maybe get a little cute, but the simple fact of the matter is investors are looking past the near-term headwinds around COVID to a world with a vaccine. And these kind of garbage reopening stocks are continuing to do well. I mean, take a look at an ETF like Jets, continuing to grind higher. WBA higher on some buyout speculation. Not clear to me. It's rumor and speculation. Didn't see anything really to confirm that view, however. On the loser side of the board, Cabot Oil and Gas, no news, but they did catch a downgrade today. Very bearish here at Chaikin after losing 6.6% yesterday. Kroger reported earnings. That stock moved lower. International Paper announced a spinoff. That stock lower by 3.2%. Some volume data out yesterday for the exchanges. Investors didn't like what they saw at the NASDAQ. Took that stock lower by 3%. And CMI, some commentary about orders. Bullish stock CMI, but down 3% yesterday on that commentary. So let's dive into the charts. So this is kind of fascinating to me. We like to pay attention to the themes and their interrelationship. Now, remember back at the end of August, beginning of September, we said that the growth over value theme was stretched to the upside, and we didn't want to chase it. Subsequent to that, consolidation with a downside bias that has now allowed the 200-day moving average to catch up. So I think we're nearing an inflection point on the growth over value theme. If we can hold the 200-day moving average, that would obviously be encouraging for growth investors. If we break down, you have a situation where it makes sense to continue to rotate into those cyclical areas of the market. What's interesting to me, though, for the ratio is that during this consolidation / pullback, we have not become oversold. So not enough downside momentum to push to an oversold level. In fact, this ratio hasn't been oversold in more than a year. You can see the Qs versus the SPY at the bottom here continuing to consolidate as well. What I will say, and I point out in my note today, is that the FanMag stocks as a group have broken topside from their consolidation. So growth value kind of hitting an inflection point or nearing one. So why is that interesting? Well, it's interesting because it's playing out as the copper to gold ratio that drives a lot of the growth value view is nearing resistance. All right, so a solid trend above the 200-day now, 200-day moving higher, but maybe a little bit of a too far, too fast. Notice that here in August, we saw an acceleration to the upside in the copper to gold ratio, right? When copper's outperforming gold, that's a sign of potential better economic environment. We want to favor the value stocks over the growth stocks. And notice that it was September when the growth value theme kind of topped out after becoming extended. So we want to pay attention to these relationships. Here's growth over value again, and you can see 63-day correlation between this ratio, copper to gold, and growth value fluttering around. So kind of interesting how it's playing out. However, we want to take note that maybe we're a little overdone here in the near term on the copper to gold ratio. Maybe a little bit of a pullback could be in order. Would be interesting to see how that plays out. We continue with our view, however, that you want to have a broad approach to the market. You don't want to just get isolated on one area and take a look at high beta versus low volatility, right? So if you're thinking about the rotation trade, you're thinking about what's happening in the market. High beta is the home to a lot of names that are kind of in the financials, the energy space, right? Some of the groups that have been coming on of late. Low volatility has been underperforming, right? Or high beta has been outperforming low volatility. You can see after consolidation, we've broken topside through resistance, confirmed by momentum with the RSI firmly in bullish ranges and actually becoming overbought in the near term. So to me, it's a healthy sign for the market. It's a sign of broadening out of participation. We've talked about it. We did our breath work earlier this week. The one real knock that I have here in the near term is just the sentiment's probably extended. We've all been reading about that. We know how that's playing out. Sentiment, again, is an environment. It's not necessarily a reason to react or act, but you want to be mindful of what's happening. You want to be mindful of the environment you're in. Risk management, always an important part of the process, because if prices start to roll over, your risk management process will help you protect capital. So that's going to wrap us up on a Friday. Special thank you to you all for taking time out of your day to listen to what I have to say day in and day out. I truly appreciate it. Head over to chaikinanalytics.com/test drive to sign up for a free 14-day trial. I hope that you all have a happy weekend, a good weekend. Be well, be safe, and I will be back with you on Monday. Have a great weekend, everyone.